Gold actually needs to go one more day above its all-time high, its recent all-time high. I think it's like 3507, don't quote me, but somewhere in that range. It's above that yesterday and today, and then it should, if it does tomorrow, get those 3 days in a row, which would again give us about an 80% probability that too is a breakout.
You can't be looking at what's going on in the world and not be talking about two very clear, distinct things. One, gold melt up out of an upside HVF that we'd been expecting to go up. Then it did a fake run. We said, okay, watch out, might have a soft month in before running. Didn't. It's actually, we were expecting it would probably break the 1st of September. It started to run in August and is now in the melt up to the upside that we anticipated on an ongoing basis to ever higher numbers.
Silver's breakout above $40 marks a powerful shift in the precious metals market, with gold on the verge of confirming its own breakout. David Morgan underscored that the case for both metals is supported by strong fundamentals as well as technical signals. Silver's climb has been steady rather than parabolic, breaking resistance levels and building a solid base before pushing past $40. Based on this structure, Morgan estimated that silver now has about an 80% chance of confirming a genuine breakout, while gold could do the same if it manages to hold above its recent highs for 3 consecutive days. Adding to the bullish setup, Morgan noted that silver's official recognition as a critical mineral by the U.S. Geological Survey further enhances its importance and long-term potential. He also pointed to Russia's recent purchases of silver, whether for monetary purposes or as part of reserves, along with interest from Saudi Arabia, as factors helping to fuel momentum. With silver already breaking above $40, Morgan is now watching the $50 level closely, a historically significant threshold that the market has only briefly surpassed in the past. For Morgan, a sustained close above $50 would signal a completely new paradigm for silver. He argued that long-term investors, or strong hands, are unlikely to sell at that point, expecting instead that silver could extend much higher towards $75, $100, or beyond. Even relatively small moves, such as from $50 to $55, would deliver outsized gains for leveraged traders, setting the stage for heightened volatility and sharp upward swings. Together, these dynamics suggest that silver is entering a period of potentially transformative price action, with gold likely to follow closely behind. Before we dive deeper into the discussion on gold, silver, and the unfolding changes in the global monetary system, don't forget to like this video, subscribe to the channel, and hit the bell icon so you stay updated with every new insight.
Well, a couple things. One is, the two cases are technical and fundamental. Fundamentally, I think anyone that's watched your show for more than 3 or 4 times or anything in this space of us metalheads knows, we have a very big problem on a global basis, and that's based on this exceedingly growing debt worldwide, and it can't be paid off. So that fundamental just continues. But on a technical side, silver has not seen a 40 handle for quite some time. And this is new territory, more or less, for silver. And there's a nice base below it. In other words, it didn't just get there in a parabolic move where it just kept going up and up and up and up. And all of a sudden we hit past 40. It's stair-stepped up. So we've seen it, get through that 35, 35.50. People have different ideas of where the exact resistance line is, but it broke through that. And instead of going right to 40, it built a base at a higher level. And now it's moved up. So we're sitting in a position now where silver, from what I call the Morgan rule, is confirmed. We have an 80%, not 100%, an 80% probability this is a breakout, not a fake out. Gold actually needs to go one more day above its all-time high, its recent all-time high, which I think is like 3507, don't quote me, but somewhere in that range. It's above that yesterday and today, and then it should, if it does tomorrow, get those 3 days in a row, which would again give us about an 80% probability that too is a breakout. So it's, I think, a little interesting that silver actually led the breakout the way I measure them. Doesn't mean I don't agree with David, don't agree with me. I'm just telling you how I do it. But the breakout here in silver is prior to the breakout in gold, again, the way I analyze it. And that kind of reconfirms to me that silver is going to start catching up to gold. We do see the gold-silver ratio getting to be a lower and lower number, meaning that silver is outperforming gold, but it's still very high relative to historical standards. So I'm still quite bullish on both the metals, but I do expect silver to continue to have a narrowing gold silver ratio over time. And we may get to what we've already seen in this bull market, which is 30 to 1. Right now, we're above 80. So that implies that from here on out, and I say implies, no guarantees, that silver should do at least twice as well as gold on a percentage basis. Time will tell, but it's hard not to be excited. But I want to stay grounded and not get too overly excited. I think now that it's a critical mineral from the USGS, that gives impetus to the validity of silver. And then, of course, who's ahead of the pack? Well, Russia bought silver, whether it was for strategic reserves or for monetary purposes, really is immaterial. It was a purchase of silver for whatever purpose. And so they've kind of spearheaded it along with the Saudis, as you said. So, yeah, we're starting to see it trickle in. What'll be interesting is it's such a small market. You don't need much more buying power to see it really move. And I just finished an article I'll be posting later today, probably on my Substack, on silver as a once upon a time strategic metal. I've gotten into conversations with some of the others in the field. I won't name them, but the United States actually started what's called the Silver Eagle program. The official title was Silver Liberty, but I'm a stickler for fact. But regardless, it was from the strategic stockpile, the defense holding of silver. And at that time, some of the senators thought, well, this silver is just lying around. We can get as much as we want, and who cares? Let's let's lower the debt. Let's get rid of some of this debt. Let's sell silver in the market. They came up with an act in 1985, started minting in 1986, and they were so short-sighted that the initial legislation said they could only use silver from the stockpile or domestically produced sources. Well, there's so little silver mining in the United States for decades that all of a sudden they had to change the law and said they could source silver from anywhere in the world to keep the Silver Eagle program going. So I did a pretty long article, pretty detailed, pretty fact only, not too much opinion in there. And I cited, I think, 5 sources. So anybody in the metals group that wants to push back on me can all they want. They're welcome to their opinion, but the facts are facts. I cite them all. And so we did have silver as a strategic metal at one time. Not anymore. Critical metal does not equal strategic metal, although you can play the semantics game. But anyway, so thanks for bringing that out. And I think you made an excellent point that I think the silver move is just getting started. I mean, it's been behind gold, as we all know. Now seeing 40, people are getting excited. They have a right to get excited. But I'm really looking forward to that 50 mark and see what happens. And we really only been over 50 for very, very short amounts of time.
Quick.
So that's the point. When we get a month close over 50, we are into a new ball game, a new paradigm. And people that own it, that are long-term strong hands, probably aren't going to sell it at 50. Now they might lighten up some. I don't know. I don't know people's thinking. But what I do know is that once that occurs, and I believe it will, then what happens? Well, the holders, the strong hands will hold because they think, wow, how high is it going to go? It's going to get 100. That's what they believe, or 75, or whatever they believe. And that means there's not a lot in the float. Strong hands are holding hard, holding strong. So new buyers like the industrial side that has to have it to maintain production of whatever they're making, solar panels or silver shot or silver liquids or silver mesh or whatever it is, they've got to buy it or they're out of business. So, and then I think the algorithms will kick in because they'll see there's very little upside resistance and very strong hands holding it. So any buying will move it higher. So they'll want to get in early and sell to their compadres that get in later for maybe a short-term trade, but nonetheless going from 50 to 55 when you're leveraged to the max, that $5 move when you're highly leveraged can be lots of fiat. So when you get a weekly close, a monthly close at an all high, and it's all in green. You see over to the left as you show it's in red. You show the line you produce where you got that, I forget the name of the candle, but it's got the little red and the long stick where it means it's extremely weak, it's petering out, it can't go any higher, versus what you're showing with the line where it's just one strong green candle after another strong green candle, a little bit of consolidation, another strong green candle. That is something to pay attention to. And that's the kind of market I want to see, Danny. I don't want to see a parabolic move where silver goes up $1 a day for 12 days in a row and we're at 55.22 and then it collapses back down to 40. I don't want that. I want it to build a base of solidity that continues this market to its ultimate destination, which, believe me, not me or anyone else out there knows what that.
Francis Hunt emphasized that even though silver has already broken through important thresholds such as the $35 to $50 range, the true rally has not yet begun when viewed against the backdrop of global debt. He highlighted research showing that the U.S. true debt-to-GDP ratio, once unfunded liabilities are included, ranges anywhere between 450% and more than 1,000%. In his view, these figures make repayment mathematically impossible, underscoring why precious metals like gold and silver are becoming increasingly vital as safe haven assets. He explained that the current global environment makes two forces impossible to ignore: gold entering a powerful melt-up phase and the long end of the debt market showing signs of collapse. Gold, he noted, had been building a strong HVF pattern, briefly dipped lower in a fake move, but then began breaking out earlier than anticipated, launching in August instead of September and now advancing toward higher targets. Since 2009, Hunt's core message has remained consistent: stay long gold and get out of debt. He argued that ongoing events are proving this thesis correct, with capital steadily rotating away from fragile debt structures and into the stability of precious metals. Let's get back to the interview.
You can't be looking at what's going on in the world and not be talking about two very clear, distinct things. One, gold melt up out of an upside HVF that we'd been expecting to go up. Then it did a fake run. We said, okay, watch out. It might have a soft month end before running. It didn't. It's actually, we were expecting it would probably break the 1st of September. It started to run in August and is now in the melt up to the upside that we anticipated on an ongoing basis to ever higher numbers. We've got a target out of this technically, which we can take you into on the charts in a minute or two. But you asked what other things. So let me just answer more in the broad before I get all technical. What other things am I wanting? The other thing is long end debt. Now we're just getting it coming a little bit down on the 10s and the across the world, but long end debt, Japan, France, UK. We did a YouTube on all the European nations showing they were all in upside continuations. You've got to mention the UK. I understand you're based there at the moment, and of course the US. So the collapse of the debt markets is something you're going to hear me say early in every interview. And we continue. So here's how markets and economic modeling should work. You keep getting affirmation for a certain kind of take, keep doubling down on that take. If you keep getting something that doesn't make sense and is contrary to a take, adjust your take. Relook at it, look at the facts. And our primary takes, a lot of people will criticize us on YouTube for being, oh, you're wrong about this and wrong about that, because we'll talk on a technical time frame. It could go down first before it's going up. And they'll say, you said it was going to crash. Generally, we've spent since 2009, when I started my own YouTube channel and started to have an audience, saying you need to be long gold and you need to get out of debt. Two simple things. And we continue to get the advancing manifestation of that. And in 2009, you were yet to have QE 1, 2, 3, 4, and twist when we started with that view. And we're still holding that view, and we've traded that view. You want to be short debt, long gold. It's simple. And the rotation is in place. So that's a foundational statement that I can hand back to you, and you can choose where you want to drill down. Yeah, so it's early doors. For people that go, oh, I missed it. I missed this, 3,550. Oh, it hasn't started. The scale of the malfeasance people have no concept of. You need to go to their website. I think it was called Demonocracy, that did visual representations of debt. and did pallets of dollars, for various things. I've just done a search. The most conservative, true debt to GDP, when you count in unfunded liabilities, Medicaid, welfare in America, is in the 450 range, according to Grok. Chicago professors had it at 660. That was in 2018 or 19. It was that long ago. The more aggressive, the more mainline, and most assumptions aren't going to be met. You're probably through 1,000. It's unpayable. It's unpayable. And the commitments that were made are going to be reneged upon as well. So you're talking about a whole base, people that paid for a certain service, and they're going to be told, sorry, this just when they need it, as a pensioner or someone who's now long-term ill, they're going to be told, well, you need to make a contribution, you need a family member to pay, or we have to do this, or we can only offer you this, a whole reduced service, which will be very rudimentary. How about some assisted dying? What do you say to that? We'll help you die sweetly, you'll get a nice dream, and we'll give your heirs a few thousand. Watch out for that trend to grow. There's going to be a massive push, and they're going to promote it, and the same evil people are going to be promoting it to soft, weak-minded people and people in pain with no money as well. So watch out. It's I've strayed a little bit, I think, from your question, but the point is there's quite a lot coming down the chute our way, and the debt is unpayable. It's mathematically unpayable, and the American debt level is the worst, and they fall off the highest ladder. But the West as a whole is going to do very badly. America does worst, then the rest of the West just behind it. In some senses, some bits will be maybe sooner. I've thought for a while, maybe the United Kingdom will have a debt crisis before America. Their rates have gone higher than Americans on the same benchmark debt. They are clearly going to collapse. But France, Europe, there's going to be collapses there too. There's master puppeteers that have an agenda that everything is going pretty well for them in terms of that, and not too good for the layman who thinks that the future is random. What do? You hunker down, you prepare for a fight, you get remote, you get out of the war zones, you get out of the worst affected nations, you build business, you use the internet and scalability to do that, and you value add to people. Our value add is very clear. You need to build wealth. You need to get paper that allows you to travel and reside in multiple countries. You need banks that aren't in the Western SWIFT system. That doesn't mean everything will be just rosy with all the other banks either, but you need optionality. 9/10 of all plans will still probably fail, but the fact that you have the one that wins and you don't know what it is, and part of one that might half work, is what will give you an existence in an environment where all the others are absolutely helpless. If you've got long life food, you're on a farm, you've got a great relationship with farmers, you're doing work, you're building a community of silver coin payment system, and everybody is working together and is of like-minded, you're in a very strong place, especially if you're in a country that isn't in the Western world. So if you can do that and go back to basics, we're going to value a farmer again, we're going to value food supply, power and water independence, another two things that I don't compromise on. I have solar everywhere. I have batteries for an extended period in my places where I live. And the fact that I'm my age and I'm able to do that, don't be upset. You can start on that journey. I might think some part of it is going to start soon, but the whole process is going to be decades. The whole process will be decades. They're not going to have the whole world on biometrics and everybody on a social score tomorrow. And there will be some countries which will be more liberty orientated, a bit slower to take up. There'll be a lot of things. And who says that's if everything goes perfectly according to their plans? So, I set a real low bar, and then, a bit of luck and some things get reversed. There's pushbacks, who knows? But you've got to get out of the sights, and the West is in the sights. London is in the sights. And the UK has got a very poor future. It doesn't produce. It runs huge trade deficits. I mean, it's something I can even show you. I just had one up diagram. You're based in the UK. We started our journey in the United Kingdom ourselves I'm on a British passport, and my father was English, so I don't say this with glee. This is not, let me spoil your day. Ha, 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 what joy. It's more about, if I can shock you into some action, then you will be better off. Share the screen. We'll go entire screen. Have a look at this. So the British debt is turning into a problem. It's not only Britain, it's worldwide. But if you just have a look at this, this is who you trade with. This is the United Kingdom's trade. And I want to just show you, these are exports. This is where you get money in.
The unfolding debt crisis highlights the inevitability of structural change, with mounting liabilities far beyond repayment capacity and Western economies particularly vulnerable. The weakening of national finances, growing trade imbalances, and unsustainable promises around pensions and welfare all point toward a future of reduced services, social strain, and forced adjustments. Yet within this turmoil lies an opportunity for resilience, strengthening local communities, securing essential resources like food, water, and energy, diversifying internationally, and holding tangible assets that preserve value. The path ahead may span decades and carry uncertainty, but preparation and adaptability will determine who weathers the storm and who is left exposed. How can individuals best prepare, financially and practically, for the long-term consequences of an unpayable global debt crisis? Stay tuned. If you're interested in real, data-backed insights on the financial system, hit like and subscribe so you never miss weekly updates. Thank you for your support, and we hope you enjoy the video.